please be sure to click that subscribe button below and join the Passive Income Posse. Oh, here we go. We do have Brandon joining us as well. We were just getting started.
Hey, how's it
Hey,
going?
thanks for joining us. We just got going here, and yeah, I just gave my little welcome spiel, and I thought I'd just go around the table, let everyone give themselves a brief introduction, and so yeah, Russ, why don't you go first? And
What's up, everybody? My name's Russ, former Navy guy and dividend investor. I tried everything. I've tried penny stock trading, swing trading, and I finally landed on dividend growth investing. It's my hand in glove, bread and butter thing that I do. So, yeah, I'm pretty much a dividend growth investor guy out here in Chicago. Cheers.
nice. And Brandon,
Hey, everyone, how's it going? I'm Brandon, Green Candle Investments. I host a couple podcasts, State of Bitcoin and the Macro Insights podcast. And yeah, I write newsletter, do a lot of spaces. Just overall, just really interested in investing as a whole, and the way people grow their wealth and everything like that. So yeah, I'm excited to join this conversation and learn a little bit more about everybody up here. So let's get to it.
nice. And then newcomer investor.
I guess. Yeah. Hi everyone. So I go by newcomer. My name's Anthony. I'm based in Toronto. This is my fifth year. Similarly, I also like mostly dividending, and I also just launched a podcast. Cool podcast. So let's all follow each other, and excited for this conversation. I think it'll be good.
Nice, awesome. I see the chat is lively already. Everybody saying, hey guys, welcome. And so, yeah, welcome to the live stream. This is the first live stream of the Passive Income Podcast. I do plan on doing a live stream the first Sunday of every month. I do know this is the second Sunday of the month, but with last Sunday being New Year's Day, I figured I'd give it a week. So let's just see where the conversation takes us, see where the chat takes us. And I'm going to, I guess, kind of open the floor. Any thoughts to sort of just begin with?
Yes, here it is.
He has thoughts, apparently. Yeah, so go ahead, Russ.
Okay, well, big news for me, I guess, is that just as of recently, this will actually make you guys happy up there in the Great White North, America's hat. What I did is I've sold off Johnson & Johnson, Procter & Gamble, McDonald's, Archer Daniels Midland. I sold them out of the self-directed IRA, my retirement account. Why? Because so those dividends that we receive from those companies are qualified dividends here in the United States, meaning that we're going to pay our ordinary income tax rate. So it wasn't really taking advantage of that tax sheltered status that those investment portfolios provide, the retirements like the self-directed and the Roth. So what I did, I sold those companies, which I did an overlap analysis. I wanted to see between three different accounts that I have that are under Schwab, and then two accounts that I have that are 401k through my work, and then also like the SCHD and ETFs that I also hold, how much overlap. And dude, Johnson & Johnson, I had 5 times overlap. So I wanted to just take more advantage. And what I did is I sold those. And one of the things I bought, well, two of the things I bought last week, 2 weeks ago, I bought BMO, Bank of Montreal. So shout out to you guys up there. And also Toronto Dominion Bank, TD, I bought just because those dividends here in the United States, there's a Canadian withholding tax. And if I have those in a retirement account, I'm not going to be having to pay those. I guess I'm just exempted from it. So it's allowing me to take advantage of that. And then I also added a couple REITs like Life Storage, ticker LSI, and Vici Properties, ticker VICI. Once again, because REIT, if most people know this, but if you're watching and you don't know, REIT dividends are not qualified because these companies, they have to pay out 90% of their earnings in the form of a dividend. So they're just passing through those earnings. So they'll be taxed at your ordinary income tax rate. And when I have those in a retirement account, it's not going to matter because I'm not paying any taxes right now. If it's in a 401k or an IRA, right, we pay those taxes once we take the money out. But in the Roth, which is a thing here in the United States, that's all post-tax money. So I've already paid taxes on that, and the growth is going to be completely tax-free. So that's one thing I've done is trying to do a little bit of strategization and optimization of those portfolios. So yeah, a little bit nerve-wracking for some people, seeing that I sold J&J and stalwarts like Procter and Gamble and McDonald's.
Wow.
But
Picking up BMO, Bank of Montreal. First, apologies for this guy. I thought he was going to behave himself, but he decides I can't control when he decides to bark, obviously. But yeah, thank you everyone who's joining us here on the live stream. And again, let's just go, Brandon. What any thoughts to response to Russ, or any other thoughts on your own?
Yeah, I mean that's great. It sounds like you're kind of reallocating the portfolio. You gave a little bit of a a different look starting the new year, which I think is always good. I always think it's especially in the United States, if you have access to the Roth IRA and all that kind of stuff, you should definitely try to use that to your advantage. The tax-free growth and everything. I don't think Canada really has any accounts similar to that. Maybe I'm wrong, but if you're in the United States or anything like that, you should definitely try to use the Roth IRA, because obviously, like you're saying, that tax-free growth after when you turn, I think it's 55 or so, 56 now, that you can take it out.
I think it's 59 and a half, I think.
Okay, 59 and
not
a half.
100% on that.
But yeah, either way, regardless, right? When you're around retirement age, the assumption is that everything's going to be at least in the green at that point in time. So compared to where you are now, so awesome stuff. Yeah, I mean, I guess just general thoughts for me. I think I've been saying this kind of on a various platforms, whether it's my pod or in Twitter Spaces or whatnot. I just been talking a lot about the overall macro outlook for 2023, and I think my just general kind of 3 bullet points that I feel for this next year is I think the Fed, for those who are kind of following that stuff, is going to continue to raise interest rates throughout 2023. A lot of people on financial Twitter are kind of screaming for a pivot, because any sign of a pivot, which means that the Federal Reserve will kind of quit raising interest rates, eventually that will kind of shoot stocks high in the air, because companies will have more access to money, and there will be more, not only companies but consumers will have more access to money as well. So there will be more spending, buying of products and whatnot. So because I think that the Fed is really not going to pivot, I think housing is going to kind of go sideways, as well as the stock market for the entire year. But that leaves vehicles like dividend investing to be, pretty strong, because even though you're not necessarily getting that mooning of GameStop or some crazy stock that's going up like, a bunch, you're still getting that consistent income, throughout the year. So, I guess that's just kind of my overall thoughts for this coming year.
Cool. Anthony, I'm going to throw that over to you to sort of answer, I guess, the similarities between what we have in Canada to the Roth
100%.
IRA.
I mean, oh yeah. So from what I understand, I think the like our TFSA or our RRSP, retirement one, right? So that would be like the RRS or tax free. But in general, like the strategy, I think for me, I'm entering my 5th year in investing now, right? And I realize that the more I know, actually really know any. And with that, I'm pivoting to a strategy of much more ETFs. So the S&P 500 and SE, I feel like at the end of the wrong ones, especially since my portfolio is very Canadian individual dividend stocks. Right now, it's to focus on quality stocks. And with SKHD, it's a filter to quality ones all in one go. And I don't have to worry about, am I picking the right one? The thing too, I find is, I think sometimes based on just 1 year or 2 years, maybe we think we're like a good investor. Like I had really good returns because I had 1 or 2 really good stocks, and I fell into the trick of thinking really good at this game. And then the next year, so last year, I got kicked with Power. So Dave, you know that one. That was a catastrophe just at the end of last year
as well.
Yeah, exactly right. So now I'm rather take less risks. Going with too many individual stocks where I could get really hurt, I'd rather just buy the index and know that I'll over the long term. Even though I'm less professional than them, I'd rather do that. So that's kind of my strategy going into 2023. So I just bought the S&P. I bought Brookfield Corporation because that's one of my few high quality conviction stocks that I really like. But yeah, that's my strategy.
Cool. Russ, I need you to answer this question. Can you see that on screen?
Yeah, certified finest. Yeah, these are my new guys. These are so it's Dave, Anthony, and Brandon. I was so very nicely asked to be on this panel, this little live round table, square table, four corner, whatever you want to call it. I got to know, Brandon, what jersey are we repping there? Who is that? I can't tell.
So it's a Bears jersey. It's NFL Sunday. I'm a
Is that
Chicago-
Alshon Jeffrey?
No, unfortunately, it's not. So it's Anthony Miller, who is not on the team
Oh,
anymore. Like not even really in the NFL. But so a little backstory of me: I ran track at the University of Memphis once upon a time, and when I was there, Anthony Miller was there, and he was tearing it up. And then the Bears, who are my favorite team in the NFL, drafted him. Yeah, I know. Exactly. They drafted him, and so I'm like, all right, I'm gonna go get his jersey. It's gonna be awesome. He's gonna be great. And now he's like almost out of the league. So, but Chicago sports guy. So I hear you're from Chicago, or in Chicago right now. So that's awesome.
Yeah.
I was born there, but now I'm in Tampa, Florida. So I got sunshines and rainbows outside. So not the gloomy Chicago winter, that's for sure.
Nice. Cool, man. Cool. All right. Anyway, so
And so
I don't
just
wanna
to
go
answer
too far
that
on a
question of who
tangent,
these
but-
people are,
Yeah.
I was just gonna say that this is actually the Passive Income Podcast, which is my channel, and I have linked Russ's channel and Brandon's channel, so you could be possibly watching on another YouTube channel, not knowing who we are because like that one person, Russ, who are these people? So
Yeah.
yeah, that's basically the long story short as to who we are. I'm seeing lots of comments here too about the ticker Dow. Any thoughts there, Russ?
Yeah, I gave a little quick comment there. I don't know. Not really my cup of tea. I would almost rather chance it with 3M, but I'm not buying. I guess I'm not buying many of the materials right now. I've never really tore into Dow, but I think they just look steady Eddie. I don't think you're going to be able to go wrong with them. Yeah, I mean, just quick glance, I think they're at a good spot to buy and hold right now. In my opinion, again, none of this is, we always say financial advice, just our opinions. Could be right, could be wrong, way off the mark. But yeah, I wouldn't. If you really like them, if you've looked into them, sure, I wouldn't feel too bad adding them here.
Awesome. Brandon, any thoughts to add?
Yeah, I mean, I haven't really done a deep dive into individual tickers or anything like that, recently. So I unfortunately don't have too much to add. I just, I'm more of a, I guess, an overall macro kind of guy is the stuff I put out and stuff I'm kind of looking into, especially at the beginning of the year, because I feel, there's going to be certain sectors that do well, but I think like overall the stock market kind of goes in one direction or the other. Yeah, I mean, I think just looking at the overall macro environment, you shouldn't really stress about it, I guess, but I just like, I like to be aware of what's going on, and try to figure it out that way, just to kind of understand like, hey, like overall, there could be a crazy event that happens and shuts the stock market down and shoots it all down, and it would be a good time to buy. But that wouldn't have to really do with anything regarding the company, I guess. So, I think like just overall for the stock market, I think there's, still some pain to kind of be had as the Fed kind of continues to raise interest rates. So I'm not quite sure if we've like quote unquote hit the bottom, obviously not financial advice or anything like that. But yeah, I think that there's like, if you liked these stocks like 2 years ago, maybe, or a year and a half ago, at this point, like you're getting a great discounted price. So it could be something that you could jump in on.
Yeah,
Cool,
quickly jump
Anthony.
in that I can give. So I'm not familiar with the Dow like that ticker, but just in general, I think if there's already like you've been looking at for a long time, you can look at the typical dividend yield. Like I love now because it yields over 6%, which it usually doesn't. That's one of the big Canadian banks for people who don't know. So if it yields over 6%, it's like it's a screaming buy, given that they've never reduced their dividend. I think for the last 43 years, they've been paying them 33. It's like it's a no-brainer for me right now. So if you have stocks like that who are dividend aristocrats, and let's say they always yield around 3%, and right now they yield 5%, it's probably a buy. You know what I mean? Even if maybe it's not the bottom yet, you might as well start and then jump into it a bit later, dipping. But I like following that strategy. I feel like it works. So yeah, that's my thoughts.
All the Canadian banks are down, man. That's why I was adding
Yeah, I would
BMO
agree
and
with
TD.
Bank of Nova Scotia.
Oh yeah. Well, I think of 6% right now, or it might a little bit more, but yeah, they're great. I love the Canadian banks, honestly. They're so yeah.
Yeah, I definitely agree with Bank of Nova Scotia. I've just recently started dollar cost averaging into that with a few shares, and I'm going to keep going. The primary reason I picked Bank of Nova Scotia to start actually wasn't the high yield. It was just because that's the bank that holds the mortgage on my house. So it was like, well, people have heard me say before, I'm trying to turn that cash register around, get them to pay me to pay them. That's sort of the idea with a few of the different positions I'm focusing on for 2023.
Nice. I actually went to.
You want to keep
TD
going on the
because-
Canadian banks?
Oh, yeah.
Anyone? Any thoughts?
Oh, I mean, I think again they're growing. I think because again we're growing in other. They're still in Canada to mature, but Scotiabank has South America to keep growing in. To keep growing in. So I think for Canadian investors, the Canadian banks again, they're just they're awesome. And I can also add Equitable Group. That's smaller and less. It's a digital one, and it grows much faster than the others right now. Their payout ratio is like 20%, and they increase the dividend 78% into. So and they can afford it too. So if you guys don't know EQB, it's also a really really good one to look at. Has a very bright. So can't go wrong with any of those.
Yeah, I would tend to agree. I do see lots of comments here about Amazon. Oh, I hit the wrong one. Amazon. I guess just the chat is talking a lot about Amazon here. So any thoughts? Russ, Brandon,
Yeah.
Anthony,
Yeah,
anybody?
I think Amazon. I think Amazon could go a bit lower, and I mean Casey pretty much summed it up right there. Really nice if you want to put her comment on. Yeah, I know. I think like Brandon said, I think we're headed toward a recession, and I don't know. Everyone still uses Amazon. We still get tons of Amazon packages. I think my wife said she gets Amazon Nisha or whatever it's called. It's just too convenient, and like many things, like this is something that's really interesting when I think about investing. Is one reason why, and Brandon could probably talk to this, and I don't know if we want to steer the direction toward crypto, but a lot of things that are, when you see something like Robinhood did, reduce friction, that's a really good opportunity and indication that could be a first mover advantage. But I just think that Amazon is really frictionless to use. Robinhood was frictionless. Crypto, I've dabbled with crypto, and I think that there's just still way too much friction with crypto. And once things reduce friction, I think that's just going to make things more appealing. But yeah, I mean, as far as Amazon, I think they're going to be okay long term. But they just laid off. Was it 18,000 employees? They're laying off. I saw Salesforce is laying off 10,000 last week. I know Andy Jassy talked about it. It's just what they need to do, So, but it's funny. We say 18,000 employees, and I think it was 1.463 million workers that Amazon has. So it's like a little bit less than 1% of Amazon's total workforce around the globe. So you feel bad for those people, but I think it's just indicative that we are indeed headed toward a slowdown, and they're trying to do what they need to do to control costs. And keep those operating margin intact. And yeah, what do you guys think about all that?
I
Yeah, I guess.
you. think oh, you go ahead first.
Okay, yeah, I was gonna say, I guess I'll hop in here, but I think Amazon, like many of the other big tech companies, are just kind of feeling the pain of, growing pretty quickly. Amazon was really the first company that was, successful from doing the whole model of not really making any money for a very long period of time, and then kind of figuring out how to make a profit. And, to be honest, without like AWS or anything like that, that's really their bread and butter. And that's where they kind of make their most profit is through AWS, which is essentially just a portion of their company that they created to solve a problem that they had. And so I think like a lot of these tech companies, you've seen it at Meta, Facebook, you're seeing it at Google, you're seeing it at a lot of these bigger companies, they're having layoffs. And that's really because, they had a lot of easy access to capital. They paid in elevated stock price, and, a lot of their employees were getting, paid a lot more than they probably deserved, honestly. And, they didn't really need, as many employees as they had. So, you're seeing things over at like on Twitter, what Elon's doing. And if he's successful with trimming a lot of really, I guess, the fat, so to speak, there, where with firing and laying off quite a bit of employees, and Twitter still kind of running, as it seems, I could definitely see a lot of these big tech companies kind of following that direction. Because like we were saying, we're kind of heading towards a recession. Whether it's transportation costs or supply chain overhead, all that kind of stuff is essentially getting more and more expensive. So those margins are thinning out, and unless they dramatically raise prices or do something else like that, Amazon's kind of going to be hurting just like everybody else. But you brought up crypto and everything like that, like the first mover. I do agree with you where Amazon and Robinhood to a lesser extent had that kind of like first mover advantage. But I think that, yeah, like you said, the friction on Amazon and people have just kind of become dependent on it, whether it's getting toilet paper through subscription models or something like that. Like, it's not really as necessary to go to the store. And, you could get some of these things. I don't know, if you're in a big city, you could get them by that night if you order it in the morning. So, I think like that's just, people just kind of have built that habit, and there's really not that much of a difference in the price. Like maybe it's a dollar or two or something like that. So I think, Amazon's not really going anywhere. It's a big giant. And I almost think, honestly, to a point, it's too big to fail. But, on the crypto point, so I'm a very much a Bitcoin only guy. So I don't really, advise anybody or say anything about any of the other alternative cryptocurrencies. I don't know if this is a family friendly show, but I usually call those alternative one shit coins, and Bitcoin really the real keeper. But, I think when it comes to that, there is a lot of on-ramps of purchasing, Bitcoin and, to a lesser extent, the other the other cryptos. But the problem with a lot of these, I guess, custodians maybe is what I'll call them, or crypto. They're almost like crypto banks. And so in the overall banking system right now, in 2020, they passed a law that there's no fractional reserve banking. So theoretically, the bank, what Chase Bank or something like that, if you go to the bank right now and you try to withdraw all of your cash, you most likely wouldn't be able to do that. They put limits on that to you, and that they passed a law that the bank doesn't need to have any percent of the overall customer funds within a bank. So meaning like there's basically just like no cash there. They don't really need to have any, I guess, that proof of reserve that a lot of these companies are kind of screaming for the crypto industry. But the crypto industry is just basically, it's been the Wild West for a long period of time. And you saw a lot of companies create their own token, FTX, Celsius, some of these other ones offer extreme yield when really like there's no product. So a lot of people might see the yield on crypto that you're getting kind of similarly to dividends. But the biggest difference that people miss is that dividends at companies is because they're making a profit. they're selling something, they have a product or a service that they're making money on. In crypto, there's really there's just a blockchain that people decided to put something on that isn't really making anything, and then they're just creating more token, and it's essentially just a Ponzi scheme right in front of your face. So I do feel bad for those who kind of I guess fell into the trap, because everybody at the end of the day wants to find a way to make money and get rich. But when I tell people if they want to get into this I guess crypto world, I tell them get in Bitcoin. There's companies like Block, which has Cash App. You can buy it on Cash App. You could buy it on a company called Strike. You could buy it on all these other on ramps that are just Bitcoin, and then pull it off, put it in cold storage. There's a lot of other ways that they're kind of, I guess, making Bitcoin and the Lightning Network, we can get into that too, a little bit more accessible. But I think overall, if I were anybody kind of getting into this industry, I would stay away from anything outside of Bitcoin.
Yeah, I just want to add something really quickly about Bitcoin. It reminds me of, okay, so I think you hit the nail on the head when you said there's Bitcoin, and then there's just a lot of the other shit coins. And it's so true that I love that you pointed out that the reason they're so risky, and it kind of reminds me of gold. And this is something that I did. I sold back coming out of the last recession. I mean, I'm a little bit older, but I sold 401k. I took a 10% penalty and bought gold, and then watched that drop like an extra $500 because I was scared of the market, and I was listening to some gold bugs, some pretty prominent gold bugs, mind you. But it's really interesting because gold also, it doesn't produce any cash. There's no cash flow component. So and you can kind of say the same thing about Bitcoin. And I'd love to know, how do you value something that doesn't have any cash flow component to it? And as far as me, I've made public about this. I've lost I think $4,000 I had in Celsius. And I guess I got caught up a little bit too, but I don't feel so bad, because one of the famous stories is Isaac Newton, brilliant guy. He lost, I think it was almost everything he had in the South Seas bubble, the South Seas Company bubble. And I mean, I think he had a quote that said something like, he can calculate the motion of the heavenly bodies, but he can't do that same thing with the madness of people or the madness of crowds. And it just goes to show, people, when one person starts doing something, making money, other people start doing it, and everybody starts talking crazy. Crazy sounds normal, and it just goes until that bubble pops, and eventually, bubbles pop. But anyway, that's my long way of saying that. That's always something that I found helpful is when buying something, to say, is there a cash flow component to it? Is this going to produce something, or is it just going to sit there the gold I have? Dude, it's still the gold. It hasn't produced 1 penny of income. And the only way I can realize anything on it is to sell it for more than I paid for it,
Yeah, and I mean that's essentially the kind of the same thing we got, with Bitcoin here, is that it's essentially a digital gold, right? But the real component with Bitcoin is the ability to transact large amounts. I kind of got into the banking system a little bit earlier. I know the Canadian banks are beloved here on the Passive Income podcast, but at the end of the day, if I wanted to send upwards of 6 figures, or even micro payments of $5 or less to Dave, and I'm in Florida and he's in Canada, I could do that essentially instantly over the Lightning Network, which would take not even 5 minutes, and that's and for minimal payment at all. So pennies on the dollar for any kind of the transaction or any amount, which I think is the real power. So we're seeing a lot of the development with that, with sending remittance payments from, whether it's the US to countries like El Salvador, which just made Bitcoin legal tender. Africa has just opened up, some remittance payments. Guatemala is getting in there. So a lot of these Latin America and African countries are kind of getting in on it. But yeah, I mean, I think the value of it's kind of tough, because you could also say the same thing about how would you value the internet, right? I mean, they always kind of compare the two, but the way that I look at it is all right, we saw the .com boom where a lot of companies were, I guess, valued on the ability to just be a first mover on the internet. and you saw those companies get highly, valued, and that shot up dramatically and then came crashing down. Where it was like a company like Amazon. And I think that's kind of like what we're seeing here. But the difference is there's actually like an underlying asset on the technology of Bitcoin, which is a little bit different, obviously, than the internet. But that's how I kind of view it, I guess. The overall, just how would you value it is a tough question, because there's like, obviously like a great technology behind it, but it's like, well, we also have a depreciating dollar and depreciating fiat monetary system that everything is kind of, increasing in price rapidly, goods and services. But I'm not really sure, I guess, how to value it, but I think, eventually it's going to keep going on up. So.
Yeah, if I could say one more thing, like,
So I just want to give a shout out to the freaking Oracle. He's definitely, his channel is one to watch. I think he still does a live stream every Friday night. And, if you want to get in more into crypto, that is definitely somebody to follow. So you can definitely check him out. I do see some of the comments, though, that we've gotten well off the topic of passive income. We've kind of gone astray into the crypto and Bitcoin world. And I do see some other comments. There was one way back asking about PepsiCo. And so I guess let's try to get back on topic. I think we lost a few people that were expecting more talk about dividend stocks and less talk about crypto. So
I'll reel it in.
Yeah, I think this comment was a response to an earlier comment.
Yeah, I can reel it in, dude. So going from crypto back to PepsiCo. PepsiCo is a business that produces cash flow. It has actual tangible assets producing actual tangible cash. And whether, like Brandon said, the dollar's declining, if we ever shifted away from the dollar, if you had a farm and that farm is producing wheat, you're going to be able to trade that wheat for something in the future, even if we're trading in seashells. Well, I'm going to be able to trade that for seashells and then use seashells to buy something else. So that's why I love companies, and that's something that's really important, I think, like with PepsiCo. I do know that their free cash flow payout ratio, which is something, a metric I like to look at, earnings payout ratio, earnings per share can be a little bit wonky. There can be financial shenanigans going on with that. But what I really like to look at is the free cash flow payout ratio, the actual tangible free cash, right? Because when you have free cash flow, that's at the bottom line. You can do, I think, one of four things out of it. You can pay a dividend, you can carry that as cash on the balance sheet, you can pay down debt, or you can buy back shares. And I don't believe there's really anything else you can do above and beyond those four things. So that's why I love to look at the free cash flow payout ratio. Pepsi is pushing 100% right now, which is a little dangerous, and people have been concerned about that, and rightfully so. But that is about, I think it was 14%, 15% above what their normal payout ratio is. And the way I look at that is their last dividend increase was 7%, but also I think as a force multiplier for that is that inflation has also been 7-8%. They've had to pay more for their goods. They've raised their prices, I think, well over 10%. I don't remember the exact number. If somebody does, shout it out. But it's going to take some time for that to work its way back in, to see the higher dollars coming in from raising their prices. But in the short term, they've had to pay more money up front for those inflated goods, and they're raising their prices, which I don't know how you guys feel. What are some of your companies? I'll throw it to you guys and you guys in the chat. What are some of your companies that I think if you have a good balance sheet and you have pricing power, meaning that you can raise your prices and people will pay it, I think those are good businesses to invest in a recessionary environment, what's coming. So what do you guys think? What's some of your favorite companies?
Well, I can jump in
Anthony,
actually about yeah. For a couple of companies that fit these criteria. So National Railway, or actually Union Pacific, very similar. Rail industry, no one taught it, but they are cash flow machines. They pump out so much money. They do lots of, they hike their dividend ratios are really low too. Like CN is about, I think, 35%. Union Pacific, I'm not sure, but it must be under 50. And Canadian Pacific Railway is like 20%. So talking about companies that, demote, because there's no way someone builds another rail right next to an existing one, right? you have your rail that's already there. No one's gonna own that route. So as long as we don't have electric truck drive by themselves and are cheap enough, they can take all the market share away from rail. I think rail is continue to be a really, really profitable business. Again, that a lot of people seem to think about, but they have amazing dividend growth. And I'm pretty sure most of the Class 1 freight railways, they've outperformed MP over the last 20 years. So that's into if people aren't always looking at it. Check it out. You can make a lot of money over the long term with rail.
And I do have my curtains closed just so the light, but as Anthony knows, the rail goes right by the other side of the road here. So I see that money going by every day, all day, every day, 10 times, at least 10 times a day. So the rail is still super important to the transportation of goods across both Canada and the US, right? So I would tend to agree that, rails are solid investments, not financial advice, obviously, but like Anthony said, nobody's going to come along and build another railroad right beside an existing one.
Exactly. And they're so important to our economies because, I mean, when CN goes on strike, again, we are almost running out of goods that they need, and the federal government has to get involved. Okay, please get back to work. And again, I'm sure it must be similar, even in a bigger country, but we still have this case of if the rail doesn't go, then people are going to miss out essential good. It's not, again, discretionary like a restaurant or something. This is things like that you need to exist. So it's also a lot of the time it goes with inflation. So if we have inflation, they can just hike their prices as well. So yeah, it's a really great underrated industry, wide moats. And if people must know, Berkshire Hathaway, that's like they own the biggest rail company in America. What is
Burlington Northern
something.
BNSF.
So it's literally one of the big pillars of Berkshire. It's just owning this rail billions over the years.
To speak to your point, the U.S. government did step in
seeing
because we had a rail strike brewing here, and the federal government stepped in and said, "No, you can't do that." So
exactly,
it just goes to show how important they are.
It's insane, right? So if people buy companies that are it's essential for civilization to exist, it's hard to go wrong. Again, it's not financial advice, but it's hard to lose lots of money over long periods of time if you're stopped, because we literally need them to be in business. Otherwise, civilization collapses.
Yeah, and it puts way too much stress on the trucking industry if all of a sudden the rail is shut down and there's so many trucks on the road already every day, but there's still, if the rails were to shut down, there just wouldn't be enough trucks, not enough truck drivers would be the primary problem there. And as well, you're also paying more to transport goods by truck. So then the cost of goods go up and you're dealing with even more inflation. I do see a lot of comments in the chat asking about Johnson & Johnson. So who wants to take Johnson & Johnson? Brandon?
Maybe the guy wearing the ticker of Johnson and Johnson should take this one.
The guy wearing the Johnson & Johnson shirt. I didn't even notice that.
Yeah, baby. Yeah. So J&J, I think people are talking about the talc. All that they're trying to do is they spin off a different entity, which the name escapes me. There's too much in my head, but it's called the Texas Two-Step, meaning that a corporation, and this is what 3M tried to do with Aero technology, the earplugs. They take that division, they spin it off into its own publicly traded entity, and then immediately file for bankruptcy. And they'll usually create a trust and put a bunch of money into that, and then that's all the money. I think J&J's KC or somebody might know this. What about maybe about $2 billion? I think is what J&J did, and then they're effectively saying, okay, you can sue this company for the talc issue, but you're only going to have $2 billion to withdraw from. It's a way to insulate the parent company, so you can't just go after the company for everything that they have and completely, bankrupt the company. So I think 3M is trying to do something similar, and yeah, there you go. Beautiful. See, this is my partner here. I got KC. She does the heavy lifting for me when yours truly can't think of certain things. But yeah, so I think that's what people are thinking about. And 3M is trying to spin off their consumer health products as well. And Yeah. So, but I think there was an injunction on that. They're trying to stop it because they're going to find a workaround. It's what they do. And to address people's concerns about, we saw this with J&J and a few of the other pharmaceutical companies with the opioid issue, is that they had to pay a lot of money. I don't remember the dollar amount. 14 billion is sticking in my head. I don't know if that's right, but they don't all pay it at once. It's over, I think, 20 years in some cases. So if with 3M, they're facing the PFAS, the Forever Chemical lawsuits. That's going to be multinational issues, I believe, in several courts around the world. And then also the earplugs, the Aero, the CAVE2. They were supposed to be reversible earplugs for the military here. They were a division that started operating before 3M bought them. And then after they bought them, there was obviously the issues and now all the lawsuits. And unfortunate for people that were truly affected. But that's two twin litigation lawsuits that are facing 3M. They've slowed their dividend increases to a penny the last few years. So I think they're just trying to stockpile cash because they know that they have some issues coming. And people have talked about bankruptcy with 3M. It's not going to happen. They're too big. They make too many products. Dude, I work in the industrial sector and they're just everywhere. You see 3M, that logo everywhere. They are so diverse, and it's just going to get spread out for whatever it is, whatever the litigation numbers end up being. But like Casey said in the chat, it probably will consume a lot of their free cash flow. And, there could be a dividend cut. I don't know. They could have to do that. But as far as expecting like nice dividend growth from 3M and capital appreciation, we might want to temper our expectations for a few years. But those are kind of my thoughts on J&J and doing the old Texas two-step, what they were doing. Yeah.
Shout out to KC. Welcome to the Passive Income Podcast. I do like this comment. No company is too big to fail. So yes, 3M is extremely big, obviously, and so is Johnson & Johnson, but you never know what the future could hold for any of these giant companies, right? So
That's true.
I guess just take that thought with a grain of salt.
If I even know, so I'm not completely super knowledgeable in J&J and 3M, but I do think America in general, you guys are like one of the most pro-business countries in the world. It's hard to imagine that they completely, like crash and disappear, especially given that they make products that not just Americans, but literally in the entire uses. It's hard for me to they would like completely disappear. I think they may have a period of difficulty, but they're still going to be around. A limited knowledge of them.
Yeah, I agree. No company's too big to fail, but we saw Enron, they failed, but there was outright fraud with Enron. I mean, they were cooking the books, and
they deserve to fail.
I don't see that with 100%. I just don't see that with J&J and 3M. And you hit the nail on the head. I think there's going to be periods in the future of murkiness and could be buying opportunities. But yeah, we don't know what's going to happen in the future. It's just our opinions and just our wild speculations that we're throwing out there.
Yeah, for sure. And I agree. I mean, I think that there's going to be a lot of, tough macro times ahead that, we've alluded to the recession. That's whether you want to say we're in it or not. There's definitely some tough times ahead. So, a lot of these bigger companies, we're already seeing kind of chinks in the armor. So, I agree with that statement. No company's too big to fail, but this is really where you can look at the strong balance sheets of companies, look at products that you guys have said that, are essential during this time. I really like the energy sector and, some of the retail stores like, maybe like a Walmart or a Target or anything like that, because I think at this time too, a lot of these companies, they offer, cheaper, I guess, off-brand, so to speak, goods and products. And that's going to see probably a spike in people just purchasing that as they're trying to, save some money where they can, because we're seeing grocery bills and other things, skyrocket. So those are some of the companies that I'm looking at right now. But yeah, I just think like as far as like consumer behavior goes, that's something that I think I'm keeping an eye on here for the rest of the year.
I do see the chat also asking about ticker symbol MDT. What do we have any thoughts
Never
there?
heard of that one.
I'm not familiar with MDT, so I'll have to let someone else take this one.
Medtronic, their claim to fame was inventing the pacemaker. They make medical device equipment. There's been a lot of chatter and a lot of people creating videos about MDT. Some people feel a value trap. I haven't really dug too deep into them, but I will say that there are certain investors who would much rather invest in medical device companies, which is what Medtronic does, as opposed to biopharmaceutical companies. And interestingly enough, tying back into J&J, right, they're spinning off their consumer health products, which is like Band-Aid and your Listerine and all those things you'll see on the shelves at Walmart. And then they're keeping another company that's going to be the medical devices and their drugs, the biopharmaceuticals. So I was just reading that comment, lost my train of thought. But anyway, I think I was going to end up with something pretty. Oh, Medtronic, that's what it was. Yeah, Medtronic, they're paying a really high dividend now because their price keeps falling. And I know there's been a lot of, and again, I haven't dug into it. I just know from chatter that I've heard there's been a lot of management level failures running Medtronic. But I guess it comes down to your faith. If the company is strong enough to ride out the bad management, because it's like that old adage goes that it's good to buy a company that even an idiot can run, because at one point an idiot will be running that company. So yeah, I don't know. I haven't really dug into them, but interesting company. High dividend right now for sure.
Nice. Nice. I also see here it says in the chat they can buy Titan Metal. They have a large stake in them already. Interesting. Also,
Okay,
worth
I have a
noting that
question here.
MDT failed to properly hedge FX.
Quick question: is anyone looking at
Yeah, go ahead, Anthony.
Apple and Microsoft now? Is it like buy yet? Because I would like to pull the trigger, but I'm still not sure. Because those companies are iconic. They're still going to be profitable forever, and they've been dipping quite a bit. Buying? This is a question for the three of you or people in the chat, because I'm considering it, but I don't know.
Look, I mean,
Yeah, I'd say
sorry.
that.
I was about to say, I mean, I'm a shareholder in Apple, so I, you know, when I'm looking at it, I mean, I'm talking to you guys on a MacBook. I'm getting phone calls on an iPad or on my iPhone. I have AirPods that I use when I listen to. I see Russ up there is wearing some AirPods too. So, I mean, I think, you know, when it comes down to it, Apple's an extremely profitable company. They have a wide moat, whether it's the App Store or whatnot. And people just love their iPhones, no matter what it is. There's nothing that's going to change on an iPhone, but people are still going to kind of continue to buy them. And essentially, like they have a stranglehold on that market. You know, I think that there's still going to be, you know, as far as like tech spending goes, I think that this next calendar year might be a little tough because, you know, like if you're struggling to buy groceries or, you know, the grocery bill or whatnot has gone up like 3 times the amount, you're more than likely not going to splurge on like a, you know, a $2,000 phone kind of thing. So I think that that's maybe something where we can see just an overall, just from a tech spending kind of route is probably going to go down. People are going to probably try to get more out of your old computers and whatnot. But, you know, I always think like Apple's like kind of like a reliable company, right? I mean, it's one of the largest companies in the country. And I think that if you were to branch off just the AirPods, it would still be like a top 15 or so company as far as like revenue or anything like that as well. So yeah, I mean, I think it's great things for that company, and I think you know, it might not be the exact right time to buy, but I definitely think that there could be, you know, some good buying opportunities, I guess, if that makes sense. Like it's obviously at a depressed price now, and I think you know, there's some ways up.
Apple, I think, is going to be good. I don't think there's any issues with Apple. I mean, they're just a behemoth. But one little bit of a concern is that I don't remember the exact number, but over 50% of their revenue is from the iPhone. So that's one thing to keep in mind. But also, I mean, for crying out loud, they have so many users like that are subscribers and We've lost Brandon. What happened to him? He got
No, he
consumed
just
by
said in the
Matrix.
private chat he had to.
Oh, okay, cool. All right.
Yeah, he'll be right back. I think.
Where was I? I was concerned for our friend. I was hoping everything's okay. How's things going down in Tampa? What was I saying?
Yeah.
Oh, Apple. Apple. So they have a lot of revenue coming from subscribers. People just love their Apple products and the services that they provide. But with Microsoft, dude, this week Satya Nadella said that there's going to be trouble for the next couple of years. And I think that can kind of tie into that a lot of businesses that employ people, they buy licenses and they buy that software that Microsoft has for them to use. But when they're laying off people, they're not going to renew that those licenses and that software that the employees they're laying off used. So I think Microsoft is why we're seeing them dropping so much. I think people are, I think investors are realizing that there's going to be issues for a while. But I don't think Microsoft's going to go anywhere, and they're just trying to get bigger, right? They're trying to buy Activision, Blizzard, which was it the SEC or the FTC, whichever acronym government entities trying to put a stop to that. But yeah, I think Microsoft's just solid, but I will say I wouldn't be surprised to see them under $200. Sometime.
That's what I'm hoping for. Yeah, that's the kind of the buy price I'm looking at. Wondering if we will hit that, but hopefully we do. Cool. We'll see.
I see we're back to Coke and Pepsi in the comments.
Ooh, really?
I will still buy Pepsi or Coke when in recession and not buying a new iPhone or computer, just personal opinion. And yeah, I think that's probably
True.
a lot of people, it's a lot easier to spend, $5 on a case of Coke as opposed to 500 or 1,500 on an iPhone, right?
Absolutely.
Absolutely.
What I like about Apple though is the margins. It doesn't cost them that much to make those items. But they sell outrageous, and a lot of people pay it because people can't live with their iPhones or whatever. I have an iPhone here, and I'm on a MacBook, AirPods as well. I'm still gonna buy them because I use them even for my software and stuff. So that's a good thing for Apple.
Yeah, it is for sure.
Yeah. So,
Hey, Brandon, welcome back.
Missed the Apple discussion and whatnot. It's not necessarily passive income, I guess. I have an Airbnb, so I live in a duplex. I live on top, and then I Airbnb at the bottom, and I have a new cleaner that came today. So getting it turned over. Have a new guest coming in tonight. So I guess not necessarily passive income, but it is a sector that I do really like, especially I guess within the next couple of years too. So maybe not necessarily Airbnb, but just real estate in general. So, but yeah, sorry about that. Glad I can jump back in.
Good point, man. Good point.
Yeah, no
Real
problem.
estate.
Any
REITs
thoughts?
have been
Any
down.
additional thoughts on Apple while we're still on the topic?
Me? I have thoughts. They have a 23% free cash flow margin. That means
Anyone? Sorry, Brandon.
That means out of every dollar coming into Apple, 23 cents is making it all the way to the bottom line, which is just phenomenal. So they're going to return over $1 trillion of cash to shareholders. The first company to do that. I don't know when that'll be, but I do remember reading that some time ago. So between dividends and share buybacks, they're just such a strong company. It's going to take a long time, I think, to unseat them.
Yeah, I don't think that there's going to be like any new crazy, I guess, innovations, but I agree with what Russ was saying. I think that there's they just got such a big moat, and they stranglehold on the market. People are comfortable with their products. They do a great job making it easy to use and whatnot. So, yeah, I like the company. And
I just think they're almost like a utility at this point because they built a ecosystem, right? It's not it's a phone system that they built, and people are stuck in it forever. And I guess that started when, if you guys remember, like when they started iTunes and everything, and get an iPod and his Apple things, and now they've kept building it and kept making their moat stronger. So it's getting possible to get out of it for people who a few years.
So it sounds like I'm in the minority here. I'm on a Microsoft laptop, and of course I have my Samsung phone, so I'm not an Apple person. But yeah, again, nothing wrong with investing in the company as far as I'm concerned, right?
We forgive you, Dave. You're abstained or absolved, not abstained. Something that starts with an A.
All right, wow. So topics that we haven't got to yet is REITs, and I think everybody knows how much I love my REITs. I did have a tweet there on Thursday where I drove past one of my biggest positions. It happened to be in the city. It's about 45 minutes that way, and maybe 55 minutes that way. Very large RioCan center. So RioCan, as Anthony knows, is one of the bigger
RioCan.
types
Yep.
in Canada. And you
was
may
that
have seen the tweet where, pardon me,
What was the name of that again? Oh, okay.
RioCan, ticker symbol REI.UN. And so as I was driving past the property, I also noticed, oh, there's a Bank of Nova Scotia. There's a Bell Canada retail store. There's a TD branch. There is a Fire Roasted Subs, which, as Anthony and I know, is in the SRV portfolio. And so I'm looking at that property going, wow, I'm doing really good just on this one property, right? So, yeah, any sort of additional thoughts on REITs? I know all my American guests love Realty Income, ticker symbol O. And yeah, let's just open up and talk about REITs for a few minutes, because I do love the monthly dividends that they provide. And yeah, I think they're just an incredible vehicle for passive income. So, I can still be a landlord and I don't have to go let in a cleaner in the middle of a live stream.
Yeah, I mean, I don't know. I like REITs because there's I guess lower barrier to entry. But to be honest, I think if there's just a lot. I mean, it's you put in a little bit more time, you get more money, right? For like actual real estate investment. But you could have somebody that runs it for you. You could pay people to. I mean, like there's a lot of ways that you can make real estate, I guess, a little bit easier and essentially passive. Do a little bit of thinking with it, or a little bit of that, a little bit of managing. But obviously, REITs lower barrier to entry, and you can you're just more liquid,
Yeah, for sure.
essentially. But I mean, the thing that I do like about real estate too is like a lot of it, at least in the United States, it's a little bit more friendly than I know it is in Canada with the mortgage vehicles. But a 30-year fixed mortgage that you could get here for I mean, it's a little bit higher of an interest rate than it was during, 2020, like that 2020, I guess, COVID craze. But, at the end of the day, like you can, buy a real estate property and appreciate and get that appreciation on mostly borrowed money. So, there's a great loan program here in the U.S. called the FHA loan, where you only have to put 3.5% down. And so essentially I've been, I've had this house for 2 years in Tampa, Florida, and I've, gotten a lot of appreciation just strictly off, like 96% borrowed money. So, you can't really beat that, I think, when it comes to the stock market. But obviously it does take like, a lot more initial capital to kind of get it started.
Yeah, I saw that comment about office space and Realty Income. So I don't know if you guys know, they merged back early in 2022 with VEREIT, which was another similar company. And then after they did that merger, they spun off Orion Office Properties, ticker ONL. And it's just done awful. And that just tells me that they don't want to be in office space. They see the work from home, and some people went back, but I just think that genie's out of the bottle, and there's just too much benefit for work from home for these big businesses. So I think they kind of are going to continue paring it down to only being necessary where they need to have office people. And if there's an option, I think they're going to lean toward just letting people work from home. So yeah, I would be real worried about office and I sold that. I always joke and I say it's ONL is what Realty Income shat out because they just don't want it. But yeah, office space, I'm not that keen on at all. But yeah, Realty Income, dude, I love them. If you go on their website, if you ever wanted to see dividend porn, well, go to Realty Income's website, look at some of their investor presentations, and beautifully done. Really, really nice information. I love Realty Income. You are my friend.
Yo, I'll quickly jump
Shout
in
out to
on the
Darth Dividend. Thanks for joining the
discussion.
Passive Income Podcast.
Spaces. So I agree. I do think the space in general is kind of, getting less and less popular. But one of my Brookfield, they had a really, really good letter that they sent out to shareholders, because they do own a lot of office space. And the thing that they were saying, which I thought was interesting, is if they focus just on really the highest quality ones, because the other ones are disappearing, they actually have more opportunities, premiums. So, like, I work, for example, in the financial district in Toronto, and it's here owned by Brookfield, and everyone is back at the office. Like, I'm working in companies aren't getting rid of that space because they love having that, even to attract for the one who live in the city downtown. I think in some of the smaller city peripheral areas and suburbs and things like that, it's probably gonna slowly move away. But for the really urban downtown and attractive, I think that there's almost an opportunity for a premium. Companies do have those best, highest quality spaces. I have the same thoughts for why I like Ryokan, because that's Ryokan's focus is to focus again on the more downtown areas that have a lot of people, a lot of traffic, also a lot of high income people that as opposed to the more suburban type of REITs that are struggling more with regards to retail. So that all goes again to what I was saying at the start of this: by quality, then regardless of if there's recessions and the macro isn't good and there's inflation and all of, at the end of the long period of time, we're probably going to, I think. And that's why I'm focusing less on stock picking these days and more on just buying SCHD and the
Awesome. Yeah, REITs are obviously a very interesting play. Like Brandon was saying, a much lower barrier to entry into that real estate market. Why is Darth not on this call? Well, we'll try to get Darth on the next live stream, or one of the next live streams. So make sure you subscribe to the Passive Income Podcast. Like I said earlier, hopefully every the first Sunday of every month in 2023. Oh, okay. Back to the Canadian banks in the chat. Toronto Dominion. As I mentioned there, driving past the Ryokan Center in Kingston, I saw a TD branch, and yeah, I've also even just watching random YouTube videos where people are shooting in New York City and other U.S. cities, and you just see a TD branch sort of in the background of these YouTube videos. I'm like, oh, that's interesting. So they've got branches everywhere now. Obviously, they also are the title of TD Gardens in Boston. And yeah, so TD Bank is really making a move into the U.S. and I'm sure other areas of the world as well. Anybody want to keep going on Canadian banks, or should we move on to another topic?
Yeah, what I like about TD is that they're not really that much into like investment banking and such, that a lot of their income is from auto loans, home loans, commercial business loans, things like that. So they're in less cyclical and risky industries from what I've read and what I understand. So that's kind of why I went into TD and what I like about TD.
Nice.
very good dividend growth.
Yeah,
as
so
well.
I do have the other Canadian
double
banks
digit.
held in an ETF, but yeah, Bank of Nova Scotia is the only one I hold outright. And then I did also mention seeing the Bell Canada retail store there in the Ryokan Center. So as I think you all know, Bell Canada is sort of the biggest telecommunications provider in Canada. And I think we've all discussed on, because you've all been on the Passive Income Podcast in the past, and I think we've all discussed sort of the similarities of, we have the big three in Canada being Bell, TELUS, and Rogers, and the US having the big three being AT&T, Verizon, and T-Mobile. Any thoughts on the telecom industry?
Well, I mean, I can jump in. We already spoke about this, but I own Quebec. No one to know because it's based in Quebec, Canada's francophone province. But they're trying to expand in the rest of Canada, and the total return behave more like a growth stock than a high yield, low dividend growth kind of telecom. So they have 40% payout rate in the dividends. They grew at 9% last year, but the year before that was like 30% or something. So it's an amazing, and I think telecom is ability. Everyone just needs to pay their monthly bills, and at least in Canada, it's really expensive, and there's no alternative. So yeah, I think it's a sector to be viable dividends. And I know in America, you guys have like Verizon. I think that's one of the better ones, and have had some trouble. So I don't know, but Verizon's the best. So I'm sure that's probably a good one to own as well. But yeah, I like telecom. I think it's a good sector.
I'll say outright again. I have it in ETF, and I do have some Bell outright. Basically, the three on in 2023 are Bell Canada, Bank of Nova Scotia one, and I'm sure Anthony probably have some thoughts on Hydro One as well, and you can explain to Russ and Brandon what Hydro One is.
Yeah, well, actually, Hydro One, we'll have to look basically the utility for our province of Ontario. So they have a near monopoly, to be honest. So you probably have to deal
Pretty much
in
monopoly.
one way or another. The thing though that made me not invest in them, and it was a mistake because I look at the returns and it did really, really well in the end. The reason I invested in them was to be owned by our provincial government, and then they got sold off, and they sold just half of it to the market. So the Ontario government owns, I think, 49% of Hydro One. And at the time, our politics, we had our premier. He was saying, "Oh, I'm gonna fire the board of Hydro One because I don't like how they." There was a lot of kind of politics involved, and don't like having my stocks being involved with too much of that because, business can be reliable. Consumers are reliable. If you give a they'll buy it. But governments are sometimes they'll just want to get involved for no reason, or sometimes for a good reason. But either way, for me, it makes it less attractive. Has that much power, so that's the reason I didn't buy it. But I think it's investment because it did really well, and never so it's a good utility for.
Yeah. So again, the reason I'm focusing on bring the cash register around, right? Trying to make enough dividends from them that they pay me to pay them. I do see that we need to wrap up here shortly. Both Brandon and Russ have to have other life commitments. So I would like to thank each and every one of you for coming on the Passive Income this Sunday afternoon. The first one ever, actually, and the first one of 2023. And so, yeah, thank you guys so much for all being here. Thank you for your thoughts, your insights, and any final thoughts before we sign off.
I always have thoughts. I'll give mine.
Anyone?
My thought
No?
is to yeah. My thought is to keep investing in yourself. Your brain is the only brain that you're going to get, and it is your most valuable tool. So never stop developing your brain. It is the most important thing you can invest in. So, ta-da! There you go.
Yeah, I agree with that
Nice.
100%.
Awesome.
And I think this year too, in 2023, this is a year where, financial education is going to be vital. So I think, the more that you can just educate yourself, understand what you're investing in, understand, the mechanics behind it. I think that now is kind of a better time than ever because really learning those fundamentals can really help you going down in the future. And this is a great panel. So thanks for having me on. Other last closing notes, make sure you subscribe to, these two fine gentlemen's channels and find their Twitters and everything like that.
All four of these channels, we all have our own YouTube channels, so you can find them all. I'll do my best to link them in the description afterwards. So yeah, subscribe to the Passive Income Podcast, subscribe to Dapper Dividends, subscribe to Green Candle IT, subscribe to Newcomer Investor. And yeah, we're all here to, share information and help each other along the way. So, Anthony, throw it over to
Appreciate
you
it.
for the final
my
thought as
final-
well before we wrap up.
Yeah, I agree with everything you guys said. And on top of that, I'll just add, if you look at social media, everything is so bleak and terrible, like it's always the world. But the thing is, we're going to have every 10 years or every 7 years or 5 years, but humans are really resilient. And it's important to keep in the bad times, because that is when we have money. So stick to your strategy. And even if everything looks bad, just don't worry about it. Just buy the best company.
All right, awesome. So thank you again, everyone, for joining me today on the Passive Income. Thank you to everyone who was paired on Russ's and Brandon's channels. That's been a really fun new experience for all of us as well. And be sure to subscribe.